All right, welcome to the TTG Monday midday recap. And S&P's just down about 25 basis points. This is something that we talked about in the weekend newsletter, where I have a difficult time thinking that the S&P is going to break out right away here. I think it's going to be little increments because we're seeing just a huge, massive move in the sectors, some up, some down. What I have in front of you in the screen is the JCJ index. That's measures implied correlations between the S&P, and you could see that they're at a two-year low right now. I've got a one-year chart up, but it's a two-year low, meaning sectors are not moving together. You've got right now the metals and mining group that's leading the way. You've got the banks that are up 2%. They're a little bit off the highs. We saw just more continuation in the banks. But these things look really extended to me. I think they're due for a little bit of a pullback. So we did structure a trade to take advantage of that. Really short dated trade in the KBE ETF. I think it makes sense to do it this way. You can see that the RSI right now on the KBE banking ETF is pretty overbought. It's 84. That's a big move for a sector. So what I did for this particular trade is I sold next week's. That's the 1125 KRE call spread. So I sold the 51 and a half, bought the 53 strike call spread. I'm collecting 50 cents on that. The most that I could lose is $1.50, the width of the spreads, or the width of the strikes minus the premium. So a dollar is the most that I can lose net. But I think it makes sense that these are due for a little bit of a pause here. It is a breakout, but sectors don't just keep going up forever. So I think this is due for a little bit of a pullback. And I think the move in bonds also is kind of telling that us as well. You could see that you've got a hammer bar setting in. This is a bar that's not finished on the day, and it's a developing bar. But you could see that this bar right now is a hammer bar that's setting in. We're also seeing a little bit of reversion going on in the gold miners. Metals and mining, as I mentioned, is up 2.7%. The gold miners are now up 2%. So we've been seeing kind of two-way flow. We just saw some ABX calls go up. But these things also look like, as some things are looking overbought, some things are looking oversold. So there's the move. The RSI did get to about a 30 in GDX. So we're seeing a little bit of a retracement back, maybe something for a day trade that works pretty well. What also I think is interesting today is the move in retail. XRT is up 2.5%. This is a group that has just gotten pummeled over the last few weeks, and now is seeing a major bounce back. Definitely helped by the earnings that we saw in Nordstrom last week. A couple of the other names like Macy's, Kohl's, also had earnings that weren't great, but nevertheless weren't nearly as bad to keep us going in a downward spiral in the retail sector. Other things that watching today, of course, the move in technology. It seems like there's a rotation going on right now. How long is the rotation going to last? I'm not sure, but watch your moving averages. Watch your moving averages in the Qs. We see Facebook today breaking below the 200-day moving average. So let's see. Let's Facebook. So to be safe for me, I would want to see, other than a day trade for a reversion, maybe a climb back, Facebook back over the 200-day moving average. Qs, let's see where the Qs are lining up. They're right below the 100-day moving average, so kind of in no man's land. I call between the 100-day and the 200-day moving average basically in no man's land. So, if we can climb back above the 100-day moving average and look north of the 50, that would entice me to kind of look at this space. But I see a lot of room from the 100-day moving average down to the 200-day moving average, which concerns me. So again, that's it's like the tale of two markets. Then you look at small caps, and small caps are continuing to outperform. They're a little bit off the highs. They were up close to 2% on the day, so still up 1.25. So maybe also getting a little bit ahead of themselves here. So I think the market needs to do a little bit back and filling. However, there are some sectors like retail. We've got retail sales tomorrow. We saw a lot of XRT calls go up. We saw Starbucks calls go up. So a lot of catch-up plays going on in that consumer discretionary group that's been really a big underperformer in 2016. The final thing that I want to talk about is look at the spread between. We talked about those banks being a little bit extended. Take a look at the spread between. This is KBE versus so U.S. banks versus European financials. There's an ETF for that. It's called EUFN. This thing is the spread is really looking blown out here. So, you could play this similar to how I played it, maybe selling upside call spreads in KBE and going long the EUFN or names like Credit Suisse and Deutsche Bank. So those are the big moves that I see so far today. Just a lot of aggressive call action, something that we haven't seen in the last couple weeks that we've been starting to see in the last couple of days, including today. So really, really chunky positions and things to trade. So again, this is why I think the S&P is really about flat right now. Is we've got big movers to the upside and big movers to the downside. So long short in this market is for me is the way to go. So that's it. Thanks for watching the midday video from Tribeca Trade Group.